If you've seen the things I've seen, you'd be able to launch a new 10 or 20 or 30 unit boutique hotel with no problem and make it profitable right off the jump. But I didn't know these things when I launched my first couple of hotels, and it cost me a lot of money. So I want to share with you guys what I wish that I knew before buying my first boutique hotel, so you can go out and be dangerous with finding and launching and running your own boutique hotels. And for those of you that don't know me, my name is Dailey, and I've bought and fixed up and managed a 200 plus unit portfolio of boutique hotels, or 6 deals in 3 states, and those deals have earned over $5 million in revenue. And the 130 unit I'm working on right now is going to generate that almost by itself. So doing this a few times, I want to share with you guys what to do and what to look out for. So let's go. So I bought my first hotel. It was a little 8 unit in Fort Walton Beach at the beginning of 2021. And I didn't know what I didn't know. Like, it was small enough that the revenue made a big impact on my business, and that I could hire out the admin staff and really kind of scale from there. But it was my first commercial renovation. It was kind of too small, like something I wouldn't buy today. And I just went through every problem in the book. Like, we had homeless people break in and steal stuff from me. I wasn't sure about the security. There was a parking issue that almost made me not be able to run the deal at all. I mean, all these things stacked up, and it just made it really, really tough for me in my first one because I just went in ignorant, right? It was guns blazing. I thought I found a good deal, and I kind of paid the ignorance tax on that. So I'm going to share how you can avoid these mistakes to make your first boutique hotel a success. I'm starting out hot with a 2-parter because I want you guys to get a full understanding of how you can be successful with boutique hotels, and both are related to finding the right hotel to purchase, which can eliminate a lot of your problems up front, because if you buy right, everything else is easier. So part 1A is aim for bigger in terms of revenue. That's because it's tough to build out your hotel team with a hotel that only earns like $200,000 to $400,000 a year in the top line revenue. That's because with a typical expense ratio of around 60%, that means if you're only able to earn $300K in revenue, for this example, that means you're only going to have about $120,000 of net operating income after paying all of your operating expenses. And that comes before paying the debt service from your loan. So you might have in that range like $80,000 of debt service a year or $7,000 a month. So that only leaves you with about $40,000 in net cash flow after all your expenses. And that's a pretty slim hotel deal. You could probably buy an STR deal or two for around that same price, because that's only about $3,000 a month in cash flow, which is not too hard on the residential side. So aim bigger, because it'll be more worth it for the time that you put in. And that Fort Walton Beach example that I gave you guys is in that too small range. So at least with what I know today, but it did get the momentum going for me. So there's something to be said for the momentum play of just getting into a deal. As long as you can make money with it, it's got the financial backing to be successful. Just be careful with going too small. This is a 2-parter because the first part is the preemptive answer to the following question: where do I buy? So that's part 1B. And I hear all the time, should I look for my own markets close to me or in better travel markets? And the answer really depends on your preferences, but you do not have to limit yourself to your own market if you find a deal that earns enough top line revenue. That's because if you find a deal with $500K or more of top line, the higher the better, because that's kind of the floor in my experience. Then you'll have the revenue that you need to hire out a team in that market and still have enough money to have the margin for yourself to make that deal work. I personally look for deals that do $1 million plus in revenue for that very reason. And I want to be able to build out a team in that location to manage the hotel so that I'm not wrapped up in the day-to-day operations. And that's the beauty of boutique hotels, right? Like, you can buy deals that don't require you to be as involved once you set up the systems and put the people in place to run the hotel. If you guys are on the hunt for boutique hotel deals and find this stuff valuable, hit the like button on the video and subscribe to the channel, because the more you watch, the more I think that you'll see that the stuff I give away on here is for free is better than most people's paid stuff. And at least that's what I try to do. And if there's more stuff that you guys want to see or learn about, let me know in the comments below, and I'll target that for upcoming videos, because I want to provide the most value for you guys. So lesson 2, and this one will seem apparent and you'll hear it when I say it, but I'll break down what it really means and how you can turn this challenge into a super rewarding and profitable opportunity. And that is, running hotels is a business. It's not a side hustle. And when I bought my first hotels, I naively thought that I could hire a property management company to handle the day-to-day. What I found though, in my market at least, and with the size of the deals that I started with, like 20 units and under, there's really not a great property management option. Like, yes, there are hotel management companies like Lark Hotels or Lighthouse and a few other lesser known ones, but those companies are more tailored to actual hotels that earn higher revenue and have a staff in place. They're not great, in my opinion, for smaller hotels with sub 1 million in revenue that operate with virtual or a staff light model in a market where they don't already have an existing footprint. Because no matter the size, the hotel is going to take someone to be the boots on the ground, right? Whether it's you, an employee, or the management companies that needs people there. And that revelation came to me pretty early on as we built out our operations plan and quickly turned into me creating the property management company in-house that manages the hotels I own. So yes, when you hear that, that does take more work up front, but it also makes it way more efficient once it's set up. Like for me to manage my 5 hotels in my portfolio at the time in 3 different states and 2 markets, it only took me about 4 hours a week to manage that because I had the people and the systems in place. And if you're like me when I started, you want the ability to make a lot of money quickly to earn financial freedom or to get out of the job or whatever it is. And this is how you do it. Because not only can you get the cash flow from the property, but you can get the management fee as well by paying it to yourself for running the hotel. And that's what I do. Like I own the hotel and I also own the management company that runs the hotel, and we charge 10% to the management company. So my total income goes up from that. With the Tremont Lodge deal, that allowed me and my wife both to leave our W-2 jobs. So if you treat it like a business, like not like a job, but like a business, you can earn more and earn financial freedom faster. And that's why I love boutique hotels. This and finding the deals in the first place so that you can apply this fast financial freedom model are probably the biggest 2 focus areas inside Hotel Launch, which is my boutique hotel mastermind for 6 and 7 figure operators. It's what we teach and apply in our businesses so that we can leverage investing in boutique hotels to fuel our lifestyles. So this operations piece is really where the rubber meets the road and where I honestly feel that we're the best in the business. So you guys want to hear more about my mastermind, feel free to click the link below in the description. And several of the members right now are applying this with deals that they've bought. Now, lesson 3 is, if at all possible, launch your hotel in the high season. So when I launched my first hotel, Bahama Breeze down in Panama City Beach in Florida, that was launched in December of, I think, 2021. So we were in the middle of the low season. So it made it really hard to gain traction, right? Just because there's not people traveling to the beach in December. And yes, if you've never been to Panama City, it does get cold in December, like 40s, 50s degrees. So go to the beach isn't really the thing. And on another deal in Seaside Escape, the one I talked about earlier, the 8 unit, that one I launched in September, like right after Labor Day weekend. So that was like where it really starts falling off into the low season in Florida anyway, in the Panhandle. Like after September, it just goes downhill and you kind of trough out in December. And I launched that one, and both of those deals are good examples of launching in the low season, making it really tough to gain the traction, to get the occupancy and get the absorption in order to drive the revenue, right? Because it's just not people traveling. So that is not what you want to do. Now on the other side of that, when we launched our second one in PCB, we launched those both in like the April-May timeframe. So that is as seasonality is increasing, and that benefited us, right? Because there's more demand, more people are looking to travel to the area. So it's a lot easier to get that absorption, meaning your occupancy is going up, meaning you're making more money. And that's really what you're trying to do when you launch a hotel, is get occupancy first. And then once you're like at your occupancy level, whether that's 70%, whatever that target is, then you can start pushing ADRs. So because we launched in April, in the spring, right, as we're getting up to the summer bookings, it made it so much easier, and we could feel it, right? The difference between launching in the Florida market in December versus April. When you have more people coming there, it just makes night and day difference of what you're going to get into your bank account. So then you're more stabilized by the time you get to the low season, right? You've got the reviews, you've got the traction, you've got the word of mouth. Your marketing starting to bring repeat guests back, so that your low season is actually much more manageable for you. So that's why, if at all possible, launch in the low season. And really, you can just work your way backwards, right, of when you want to close. So if you know you're going to try to launch in like March or April for that spring break time frame, and it's going to take you 3 months to do the renovation, just back that up to like a November, hopefully, closing time frame, so you can get in, start your renovation, have your furnishing and go live phase, and then launch, turn on your listings, start accepting guests, and then get the income coming in. Because what you don't want to have is no reviews and no social proof, right? In a time where that not many people are traveling to your market because demand's so low. So only the best listings are going to get bookings in that time, like in the low season. When you launch in a high season, you have the demand, you get your first reservations. Because of that, you get your first reviews quicker, and it tells everyone else that's looking to book your place that it's worth staying at. So just like an Amazon product with no reviews, People don't like booking hotels with no reviews. All right, lesson 4. And this one almost sank me at one point, and it was the first and hopefully the last capital call I'll ever do. And because of that, now I plan for it. And it is break out your underwriting by the month. So with STR investing, it's standard to project on an annual basis. As in, I think this unit is going to generate X amount per year. I think my expenses are going to be Y per year, and therefore my cash flow will be Z per year. And then you use that to calculate your returns. And that's how AirDNA gives you the breakdown, and it's usually sufficient to do that with single family houses, but it's not the case with hotels. And that's because with running a hotel, you have more variable expenses, right? More software costs and labor costs and higher utilities and taxes and insurance, and the more things that just go into running the hotel. And seasonal fluctuations will impact your cash flow more because you have a lot more units to fill. Just trust me on this one. You need to project your income and expenses by the month so you can plan for what cash flow you'll have by the month, and even more important, what your cash balance will be by the month. The last thing you want to do is have your renovation going on in the low season when your revenue is the lowest, and then you bottom out on cash and not be able to pay your payroll or your mortgage, because that means you go belly up. So that is what almost got me. So take that lesson from me and underwrite your properties with a monthly breakdown. If you guys don't know how to do that, like I put the link to my underwriting spreadsheet below in the description, so you can go download that for free and then start underwriting hotels the right way. Lesson 5. This last one is another great tip for launching your first hotel. And this one can cause some embarrassing problems for you if you don't get it right, and some really bad reviews that can be hard to overcome. Because you want to start strong with good reviews and positive word of mouth like we talked about, not make your job harder for the little stuff that would have been easy to fix. And the thing about this stuff is it's not hard to do, it's just often overlooked. And it is, use your units as your guests would before you open them up to guests. And that means test everything. Like turn on all the lights and use the sinks in the toilet to test the hot water in the sinks, right? Turn on the TV and make sure that the streaming apps load, or connect to Wi-Fi, open all the drawers, lay on the beds, turn on the shower. Like you don't have to actually take a shower, but make sure it all works. And I'll share some of my embarrassing stories around this because I want to highlight the importance of doing this for you guys. So when I launched my first hotel, we had big windows in the bathrooms, which was great because it let in natural light and opened up the space. But we forgot to put the frosting on those big windows before launching. And those big old windows looked right to the showers. So needless to say, our first guests were not very happy with their stay, and we immediately fixed it the next day, but we had like 15 out of 20 units blocked and several complaints and bad reviews from that we had to overcome. And even as recently as a few weeks ago, we launched our bridal suite at Tremont Lodge, which is my 130 unit hotel and resort in the Smokies. We're just about done with the first of 6 phases of that, but that bridal suite was in the first phase, and that suite has a massive tile shower with one shower head and then a rain shower head in the middle. Like it's really freaking nice. And when we tested the shower, the water pressure was so low that the rain head just kind of like trickled down. So that awesome feature that we spent a lot of money to build out couldn't be used, but we caught it and we fixed it. So this can play out in a lot of different ways. So just make sure that you're thorough, right? For those of you that really appreciate the numbers, it takes 5-star reviews to overcome a 4-star review to keep above the 4.8 for the Superhost status. Now that's just for Airbnb, but that's the standard for what we shoot for across all of our channels because it's the one of the top factors for getting bookings, maybe the top factor. So you really want to make sure that hits. So those are my top 5 lessons of what I wish I would have known before I started investing in boutique hotels. Most of those, the ignorance tax was paid in a big way. And my whole purpose for making these videos is so you guys don't have to pay for those lessons with your own time and with your own money, but learn from what I've gone through, and so that you can apply it in your own business and you can get profitable sooner. So let me know which one of these lessons you guys learned from the most. And if you have any questions, drop them in the comments below and I'll be happy to answer them. So see you guys on the next one.